Start with the market action. Weak global cues spooking sentiment on the Wall Street. The Sensex and the Nifty ended with cuts of 1%. The Sensex lost over 800 points today, and the Nifty was down by over 250 points. In fact, all sectoral indices closing in the red. The Nifty has now slipped below the 200-day moving average. Mid-caps have seen sharper cuts than the blue chips, so that's the market story for you this afternoon. Meanwhile, the rupee ended the day largely flat, even as currencies across Asia tumbled against the dollar. The Indian currency traded in a narrow 9 paisa range. Traders believe that the RBI is likely to have sold dollars via state-run banks to limit the rupee's losses. 80 to 31 is the dollar rupee for the day. Speaking of central banks stepping in, the Bank of England has intervened in the bond market for the second time. The British Central Bank has announced an expansion of its emergency bond buying operation and said that it will widen its scope of purchases of UK government bonds. The central bank has warned that the sell-off in the UK government bond market poses a material risk to UK's financial stability. A move of this magnitude is highly unusual in the sovereign bond market of a developed economy. And staying with the global economy, JP Morgan's global CEO Jamie Dimon backed the Bank of England's intervention, saying they had little choice. Speaking exclusively to CNBC, Dimon also said the new British government under Liz Truss must be given the benefit of doubt after sparking market turmoil. Dimon has warned of a recession in the US over the next 6 to 9 months. He believes the S&P 500 could fall another 20%. Take a look.
It's QT, which we've never had before. So therefore, the unknown effects, and you see it today in bond markets around the world and sovereign markets and people selling U.S. Treasury debt, and it's the war. And these are very, very serious things, which I think are likely to push the U.S. And the world. I mean, Europe is already in a recession, and they're likely to put U.S. in some kind of recession 6 to 9 months from now. In hindsight, they waited too long and did too little, and QT should have started sooner and all that. But they're clearly catching up. They're clearly motivated to catch up, and from here, let's all wish them success and keep our fingers crossed that they manage to slow down the economy enough that it doesn't, to cause whatever it is mild.
What about stock markets? Where do you see the trough for the S&P 500?
Oh, I don't know. Look, it may have a ways to go. I mean, it really depends on that soft landing, hard landing thing, and since I don't know the answer to that, it's hard for me to answer that. But it could be another easy 20%. And I think like the next 20% will be much more painful than the first. Rates going up another 100 basis points are a lot more painful than the first 100 because people aren't used to it. And and I think negative rates, when all is said and done, will have been a complete failure.
While rates moving higher, stock markets lower. That's Jamie Dimon. Global agencies continue to downgrade growth forecasts for the world and India. Latest is the International Monetary Fund. It's cut its FY23 growth forecast for India by 60 basis points to 6.8%. This is lower than the RBI projection of 7% growth. But India remains the fastest growing major economy. Ritu joins me now with the highlights. Ritu, take us through what the IMF is saying.
The big takeaway from IMF's latest report is that a third of the world economy will likely contract this year or the next, and IMF warns that the worst is yet to come, and for many people, 2023 will feel like a recession. Let me begin with India's outlook, where the growth forecast has been cut steeply to 6.8% for FY23, lower than RBI's projection of 7% for the year. IMF says this downgrade reflects a weaker than expected outturn in the second quarter and a more subdued external demand environment. India's growth is then seen slowing down to 6.1% in FY24 and at 6.2% over the medium term. Inflation is seen averaging 6.9% in the current fiscal and 5.1% in the next, and the current account deficit is seen at 3.5% for FY23 and 2.9% of the GDP the year after. Now, while the global growth forecast for this year is left unchanged at 3.2%, next year's forecast is cut by 20 basis points to 2.7%. IMF says the 2023 slowdown is going to be broad-based, and this weak growth reflects significant slowdowns for the world's largest economies, that is the US, China and the Euro area. For 143 economies constituting 92% of the world GDP, the outlook is significantly weaker than earlier estimated. This growth outlook is the weakest, in fact, since the 2.5% growth rate seen during the global slowdown of 2001, with the exception of the global financial and COVID-19 crisis years. Now, IMF also says that inflation is now expected to peak at 9.5% this year before it slows to 4.1% by 2024, and it warns that it remains the most immediate threat to the current and future prosperity of the world. So far, IMF says the dollar appreciation appears mostly driven by fundamental forces, but this sharp appreciation adds significantly to domestic price pressures and the cost of living crisis for emerging economies, which are already facing challenges. There are multiple risks it highlights to this outlook. Most importantly, that monetary policy could miscalculate the right stance to reduce inflation. More energy and food price shocks might cause inflation to persist for longer than expected. Halting gas supplies by Russia could depress output in Europe, and so on.
The 2023 slowdown will be broad-based, with countries accounting for a third of the global economy expected to contract this year or next. The three largest economies, the United States, China, and the euro area, will continue to stall. In short, the worst is yet to come, and for many people, 2023 will feel like a recession.
The worst is yet to come. That is the IMF on the global economy. The Organization for Economic Cooperation and Development has released a new global tax reporting framework for crypto assets. Now, the new framework proposes an automatic exchange of information between countries, mandatory customer identification, along with rules for exchanges, brokers, and other operators facilitating trade in crypto assets. The Indian government has been calling for global cooperation to regulate crypto assets. Remember, we didn't go through with pushing that bill in Parliament. Sapna Das is standing by with the details. Sapna, take us through the new framework that's been proposed by the OECD.
Well, it's a completely new framework that the OECD is suggesting in terms of not exactly regulating crypto assets, but basically reporting on crypto assets and helping countries share information among each other on the same. This is going to be discussed also in the G20 meeting of the finance ministers and the central bank governors, which is going to happen tomorrow and day after. India is very much represented there. Our finance minister and the RBI governor both are there with their respective teams. Of course, we have to wait and watch and see what is going to be India's response to this. But the new framework designed by OECD works on the simple premise, same as that of the common reporting standards for tax matters, which is basically you report on the assets as well as you help countries share information among each other. So you need a proper system, you need a proper framework for that. That is what is being suggested. However, the OECD is also suggested some carve-outs, basically those crypto assets which are used for investment purposes or not used for investment purposes or not used for payments, they may be given some kind of an exemption. Interestingly enough, the OECD is also suggesting some amendments to the common reporting standards for tax matters. There they are saying that all kinds of digital financial products should be comprehensively covered under the minimum standards. So I think all in all, both are going to be dovetailed to each other. This is a a model that is, it's a kind of a draft model being suggested on crypto assets. India in the past has always maintained that you need a global system, a global paradigm to deal with cryptocurrencies, and that is what is being proposed, at least at the moment. Remaining, they have to see how this really pans out over the next few months.
Yes, we will have to see. Thanks very much, Sapna, for joining us. Ukraine's President Zelensky has asked G7 nations for more arms and ammunition. This after Russian missiles targeted Kyiv and other cities. Missile strikes by Russian forces in the capital and other key cities earlier this week had smashed civilian targets, killing at least 19 people and leaving over 100 injured. The Russian retaliation came after an explosion on the Kerch Bridge, which connects mainland Russia to annexed Crimea. Putin had termed the incident an act of terror perpetrated by Ukraine. US President Joe Biden promised to provide Ukraine an air defense system. Meanwhile, Russia has declared Mark Zuckerberg's Meta as a terrorist organization. India voted to reject Russia's demand to have a secret ballot in the UNGA on annexation of the 4 Ukrainian regions. In corporate news, market regulator SEBI has approved the sale of L&T Asset Management Company to HSBC Asset Management. Remember, the 3,100 crore rupee deal has already received the green light from the Competition Commission of India. Once the deal is complete, L&T mutual fund schemes will be managed and operated by HSBC AMC. In the aviation space, sources tell CNBC-TV18 that Jet Airways has identified 5 aircraft, including 3 A320neos and 2 B737-8 MAX planes for its initial fleet. However, the airline is yet to sign the aircraft lease agreements. Jet Airways, in a statement last month, had said it is quite close to the October target for starting operations. However, we learned from sources that the relaunch is unlikely to happen this month. The Competition Commission of India is likely to issue final orders in the Google Play Store case. We learned from sources that CCI has come up with a penalty along with a suggestive remedy as part of the final order. Just to remind you that in 2020, Google implemented a 30% commission for all Play Store transactions, a decision that was widely criticized by the Indian stakeholders, startups mainly. The World Health Organization has refuted Maiden Pharma's claim, telling CNBC-TV18 that WHO never inspected Maiden Pharma's facilities or its product. The UN agency has said that the cough syrups linked to the death of 69 children in Gambia may have been contaminated at the point of manufacture. Parikshit Luthra joins us now with more. Parikshit, what more has the WHO told you?
Well, the WHO has said that it's working to ensure that all the remaining contaminated medicines are taken off the shelves in Gambia and other countries where they may have been exported. They also confirmed to CNBC-TV18 that they have not inspected nor certified or assessed any of the products made by Maiden Pharma. And this is a company that has an approval from the state regulator in Haryana. They also said that 72% of the cases of acute kidney injuries among children who took these medicines made by Maiden Pharma were children below the 2 years of age. At the same time, samples of medicines used by children came back positive for contaminants like diethylene glycol and ethylene glycol. And all of these were traced back to the 4 cough syrups made by Maiden Pharma. The cause of contamination is still under investigation according to WHO, but they said that the responsibility lies with the manufacturer, and the point of contamination may have been where this medicine was manufactured at the factory. Failure to observe good manufacturing practices may be a contributory factor, and the contamination was discovered during investigation into the children's death. So a detailed investigation still underway. They're sharing their analysis with Indian authorities as well.
We are also awaiting the report of Indian authorities. Remember, samples have been collected from Maiden Pharma, even though it was not selling in the domestic market, but the regulator is investigating now whether there has been contamination at the point of manufacture, as WHO suspects. Parikshit, many thanks for joining us. Warren Buffett-backed Chinese EV maker BYD has launched its first passenger electric SUV in India called the Atto 3. The Chinese manufacturer has 2 plants in India with 3,000 employees, and it intends to sell 15,000 electric vehicles in 3 years. Bookings open from today, with prices to be announced later. Jio BP and Mahindra & Mahindra have expanded their existing EV partnership. Jio BP, which is a fuels and mobility joint venture between Reliance Industries Limited and British Petroleum, will set up charging network for Mahindra's upcoming electric SUV launches. Starting with 16 cities, Jio BP will install DC fast chargers at M&M dealership network and workshops across the country. Bookings for the EV variant of the Tata Tiago have crossed the 10,000 mark by noon on day one itself. The company had offered an introductory price of 8.49 lakh rupees for the first 10,000 customers. It has decided now to extend the introductory price for the next 10,000 customers as well. Road and Transport Minister Nitin Gadkari unveiled Toyota's pilot project on flex fuel cars today. The Corolla Altis Hybrid is India's first ethanol-ready flex fuel car. Such vehicles offer the flexibility to switch engine fuel from petrol to ethanol. Of course, this is not being launched commercially yet. We will head into a break, but up next, Rajasthan's garlic farmers burn their crop after prices drop sharply to unsustainable levels. A special report when we return.